Welcome to the monthly Consumer Issues Program hosted by Cornell Cooperative Extension, Tompkins County. On the second Thursday of each month, we are joined by New York State Assistant Attorney General Michael Danaher, who makes a presentation on a topic of consumer interest. Today, he will give us an overview of the ins and outs of insurances. After his presentation, Mr. Danaher will answer questions that viewers have submitted to CC Tompkins in the Zoom chat box. This presentation also will be available on the CC Tompkins YouTube channel and will be broadcast next month on Mondays on Public Access Channel 15. Thank you for joining us today. And now here is New York State Assistant Attorney General Michael Danaher with today's program.
Thanks, Sandy. Good morning, everyone. It's good to be back with all of you for our monthly consumer issue program. Today's topic deals with the ins and outs of insurance. Now, I know that that's not the most exciting topic that many people would think about as far as consumer issues, but it's really important. We're repeatedly challenging everyone out there to be good consumers. There are consumer rights and there are consumer responsibilities, no more so than when looking into various insurance products. I, like many people, are not the experts when it comes to insurances and this, that, and the other thing, but I know it's needed. I know I've had insurance in many different areas for many, many years, and it's often one of those things that when you think about it, it's not something that we want before we need it. We usually need it before we actually want it because nobody wants to have to spend any more money, because you think of insurance as kind of this esoteric, you can't touch it, you can't feel it, you can't look at your bank account and say, oh, I got that much more money because I have insurance. It's usually something that we actually need before we want to have to pay for it. If there's an automobile accident and you have damage to your vehicle or you cause damage to somebody else's vehicle, you're sure glad that you have the insurance to cover those sorts of things. With other consumer products, we frequently want the consumer product or service before we actually need it. Just think about it. I really would like that new car, or I'd like to buy this new house, or I'm going to go out and get this new product that's out there, this new computer or new cell phone, and you really want that before you necessarily need it. The vice versa is with insurance. Once we have it with a consumer product, we can touch it, we can feel it, we can hold on to it, and you can say, wow, look what I just got for my money. I got this new cell phone, and wow, it's got all these bells and whistles. But we don't usually hold up our insurance policy and say, wow, look at this great new insurance product that I have. But we sure are happy that we have it when we need it. None of us wants to spend the money if we don't have to, but it's, in some instances, we absolutely need it. For example, if you have own a car, you're going to need insurance to cover that car. New York State has certain minimum requirements to have a vehicle insured. If you don't have insurance on your vehicle, it'll have an impact on your license to drive in the state of New York. There are other types of insurances out there that we'll go through. And I know I've had many instances where I've been very glad that I had insurance. I grumble a little bit when I have to write the semi-annual or annual premium for it. But there have been instances where I've said, oh man, I am so glad that I ended up having insurance. But in talking about and thinking about insurance products, we have to decide what it is that we need. And we should think about that ahead of time rather than when it's too late. We may not spend enough time thinking about our needs and taking the time to figure out what is best for us when it involves what type of insurance that we need to have and should get. Let's kind of talk about insurance itself. What is it? It's a product designed to protect us in the event of a financial loss. That's one thing that consumers need to be vitally aware of, because sometimes insurance products are sold to us for some other reason than to protect us in the event of a financial loss. Some insurance products are sold or attempted to be sold as investments or other things than what it really is designed to do. The root of insurance is insure. And I looked it up, and the definition is to make certain, especially taking necessary measures and precautions. So it really is designed to protect us in the event of a loss. Insurance is typically a contract between the insured and the insurance company, the insurer, whereby one party undertakes to indemnify, guarantee, or protect financially against a loss by a specific contingency or a peril, a risk. Understand it as protection, not as an investment for the most part. I'll use an example. I haven't seen this more recently, but throughout the years, there's been, I know in life insurance realm, to protect against the loss of a life and the financial support from that person. So you would typically think of it as it was protecting against a specific loss, but you would think in life insurance, okay, you pay a premium. If somebody passes away the insured passes away within the policy period, then the policy will pay for that loss. Well, in some instances back in the day, different types of insurance products, life insurance products, we'll talk about them more in particular, were being sold as vanishing premium life insurance policy, meaning the premium vanished. In other words, you pay for a certain period of time, and then after a certain period of time, the premium disappeared. People think, wow, that's a great thing in the world. And the greatest thing in the world. I'll talk more about that later as to how that really didn't work out very well. And if people were buying it for that investment purpose, that over a period of time, the premium would just vanish, and then they wouldn't have to pay anymore, and they would still get the policy benefits. It proved to be not true. So you have to look at it as, I'm trying to purchase this insurance product to protect me from this loss, not to make money on it in the future, not to have it accumulate all kinds of value, but during this period of time that I'm buying it for, I'm protecting myself against a specific loss. So there's many different types of insurance products out there. In fact, there are probably a number of them that we don't think about very much, but they're all out there and they're all available, and it is all based upon what our need is. What is your need for protection against a particular risk? One of the big insurance products that we always think about is auto. What does it protect? It protects us from financial loss due to property being damaged or people being injured. Again, every auto in New York must carry a minimum amount of insurance coverage. That is insurance coverage to protect against loss should you be involved in an accident and it's your fault, or you'll have a component of no fault insurance that'll cover you regardless of who's at fault. And there has to be certain minimum coverages. in case someone gets injured by someone else, there is at least a minimum amount of insurance coverage available. So that's separate from your property damage. So if you get involved in an accident, you hit someone or cause physical damage to the vehicle or to your vehicle, you back into something and you dent your car. A component of your insurance policy can cover you for damage to the vehicle. My kids have had numerous fender benders or damage, and I was really glad that we had insurance when those particular events happened, so that we can get our cars repaired. Some coverage, you can have all different added coverages on there. You can get rental car coverage. So if your car is out of service for a period of time, your insurance policy will cover all or a portion of the rental car you need to replace your other car that was damaged. So every auto must have a minimum of coverage. I believe the minimum coverage now is $25.50, which means two things. If one person is involved in an accident and becomes personally injured, that the minimum coverage is that person would be covered up to $25,000. And the $25.50 means that if there are multiple people injured in the accident, that the coverage is up to $50,000 for more than one person. Medical bills, those sorts of things. So we're initially covered in an auto accident under our own policies called no fault, that if we're injured, we'll have our basic medical bills and those sorts of things covered up to the amounts of the policy. And you can get extensions of that to increase those coverages amount. And again, my position isn't here to say you should have this much insurance or that much insurance. You do have to have the minimum coverages that are required by New York State. But most important thing is it's individual to you. If you have the minimum coverage, the insurance company, you are covered up to a certain amount of money damage that you may have caused. You can purchase additional amounts. What we all need to do is to check our individual circumstances and see what is the appropriate level of insurance. Because what is it for? To protect us against a financial risk or financial harm. So if you were to cause an automobile accident and you got sued by someone who was injured in that automobile accident, your policy only covers up to the amount of your policy limits. If you don't have enough coverage to cover the extent of injuries that may have been incurred by the other person, then it's your own personal assets that would have to be used to cover those damages. That's why we have insurance, so that you can get what is the necessary amount that you need to protect your assets in the case of there's an accident or something like that. And there's, again, serious consequences to not having auto insurance. Every automobile must have it. If you don't have it, your license will be suspended or revoked, depending on the length of time that you have driving around without insurance. So it's very, very important that you have the coverage that's required by law. Another area of insurance that many of us have to think about is our home insurance. What does the home insurance cover? We usually think of it as, well, if our house burns down, we have insurance so that we can build the house back up. And yes, that's true. But there's also a liability component in our homeowners insurance policy, which is if somebody gets hurt on our property, that we will have liability coverage up to whatever the limits are on that policy to cover for those particular loss. So it covers the loss of property and any liability that we may have as a result of somebody someone being injured. This is one of the classic examples where I said that this was one of the times that I was really happy that I had insurance. Well, I'll give you the story. What happened was that a few years ago, maybe more than a few, 5 or 6 or 7 years ago, we had a terrible stretch of cold weather. I mean, sub-zero temperatures for a week or two at a time. And there were stories all over the newspaper and on the news at night on television about people's pipes freezing. And typically under the homeowner's insurance policy, if the pipes within your house break and water's all over the place and causes damage, that you will hopefully have coverage under that. However, in my circumstances, it turned out that the water didn't freeze inside, let's say, our kitchen or bathroom. There was a water pipe that actually froze underneath our foundation where it came into the house. So we had no water in our house whatsoever. We didn't have a pipe break, but we had no water. And so we ended up calling a plumbing company, great company. They came out to our house. They after a number of days, we had a plumber in our basement for all night long, one night, trying to unfreeze the pipes by, lack of a better description, they put a jumper cable hooked to a battery, a jumper cable at one end in our house, and they put a jumper cable down by the street where the shutoff was for the street, shooting an electric current through, hopefully to generate enough electric currency to get the pipe unfrozen. And surprisingly, it unfroze after like 10 hours, all through the night. And we started running a pipe, running a water faucet after that to try to keep it going, because if water doesn't move, it freezes. And unfortunately for us, it refroze. And we ended up having to have the company come back out. They again spent all day at our house trying to unfreeze it, same process. And finally got a call at the end of the day from the plumber saying, hey, this could unfreeze in 10 minutes. It could unfreeze in an hour. It could unfreeze days from now. What do you want to do? And what we ended up agreeing to do was to have them dig the front yard up and run a new water line into our house so that where it froze, which was under the foundation, we put a new water line in. And it was thousands, with the plumber being at our house for 2 days. You can imagine how expensive having a plumber there would be. It was thousands and thousands and thousands of dollars. And I contacted my insurance company, and I'm so glad I had the insurance, that it turns out that my insurance coverage was such that if the pipe froze within the perimeter of the 4 walls of our foundation and house, that I had insurance coverage. And what that was is the insurance company determined that because and the plumber figured this out, because the water line that fed our house went under our foundation, within the 4 walls, but under the foundation, and then went up into the house, we were covered because the foundation was, the perimeter of the house was what was covered. And they ended up covering thousands and thousands and thousands of dollars that we had to pay to have a new water line installed. And except for the deductible, which I was happy to pay because it was significantly less expensive than what the total bill was, the insurance company covered it. And yeah, I could sit there and complain about how much I had to write out every year, but I will tell you now, every time I make my homeowner's policy payment, I am happy to do it because of that coverage that I got under that policy. So I didn't even know it covered that. I was astounded that it did, but it did. So those who are investigating, let's take homeowners insurance, investigating homeowners insurance, check with your insurance company, with your insurance agent, What does it cover? And think to yourself ahead of time, what do I need it to cover? Yes, if the house burns down, we need to have coverage. Yes, we need to have coverage of our contents that are within the house, the televisions and the furniture and all that stuff that's in the house. We need coverage for that. And see what it covers. And if you think you don't have enough coverage for your personal property inside the house, explore the opportunity to add things to increase the amount of personal property protection. Here's another significant thing that you may want to consider doing. You do have coverage of some of your personal property, and you may get coverage of additional amounts if you believe that you need it. You have expensive furniture or other things that you might want to have insured. A good recommendation is to film everything that's in your house. Film couches and appliances and everything that you have, and just do a video of it. Go through slowly, open the cupboards, take pictures, video, the whole thing, and then just save the video file. Because then if something should happen that results in a loss, you'll have a video inventory of everything that should be covered. So you lose your couches, you lose your kitchen table, you lose your appliances. You can go to your insurance company and say, here's the video of my furniture, my appliances, my other personal property, computers, all the personal stuff that you have, so that you can make sure that the things that are covered, that you have a record of. That's always a very good idea, just kind of as an aside. And again, make sure that if you have property that, maybe you have a lot of acres, somebody could be hurt on your property, seriously hurt on your property, make sure that you have the insurance coverage to protect you. The other big thing that we always need to explore is health insurance. It's one we hear about a lot. It's very expensive, depending on the coverage that you have. And it pales in comparison to medical bills that could be associated in the event of a risk. And again, I'm very happy to have insurance and health insurance. I had a health issue that cropped up relatively recently, and I am so glad that I had coverage. For those of you that are trying to explore different types of coverages out there, I recommend website is newyorkstateofhealth.ny.gov. It's you can just put in a browser search, whatever you use, Bing or Google or whatever, and put in New York State of Health and click on it. And there's a through the Department of Health, there's a New York State marketplace for different types of insurances. That website will also give you an opportunity to, if you need to contact an assister. There are assisters out there that can assist you in working through the labyrinth of insurances to help come up with the product that best suits you, your needs. You may qualify for Medicaid. You may qualify for the Child Health Plus plans. There may be low-cost plans that are there for you that can assist you in getting health coverage. There's also a small business marketplace. If you're a small business and that you're looking at possibly getting insurance, health insurance plans for the employees of the business as well, you can search that site and maybe even get some assistance. I know this may not help those who may be viewing this program, but the cutoff date is March 15th of every year. I know we're fast approaching it as we tape this show now, but if that's something that you are interested in, please go to New York State of Health. And again, if you need assistance, there are assisters that you may be able to sign up with. They can give you some guidance. I know that there are certain not-for-profit organizations in each county that can assist people with trying to decide what plan might be the best for them. they will give you during this enrollment period. Some places you have to set up an appointment to come in and speak with somebody. They're not going to tell you what one works for you, but they'll be able to give you the options that you might have available so that you can make a good informed decision out there. Also, there's other types of insurance products. Disability. If somebody were to be disabled, they could have an insurance policy that may help offset their loss in income during the period of time that they're disabled. There are many different products for that. There are also loan protection insurance products out there. If you have a mortgage or an auto loan, you may be offered an opportunity to get insurance that if you become disabled, or life insurance, that you are deceased during the loan period, you could have an insurance product there that will pay off the loan or a portion of the loan if that risk should materialize. I only encourage people to be aware of what those products out there are. Frequently, the ones that are attached to a loan, they're usually associated only with that particular loan. So, for example, if you got, let's say you got life insurance coverage to protect you on a loan. Once that loan pays off, there's no need for that insurance coverage anymore, and it ends. So you've paid for it, but it's gone. But for example, if let's say you had a $20,000 car loan and you said, well, I want to get insurance in case something happens to me during that period of time, during the time of the loan. If you get the credit insurance, that you will have that coverage. So if, as you're paying the loan off, if something should happen to you and you invoke the policy and the policy pays off the loan, that's great. If, however, you have only one payment left on your car loan, so you got life insurance, credit life insurance, and you have one payment left. So you had a $20,000 loan, you have a $350 payment left. If for some reason you should die, then the policy pays off $250 or $350. It doesn't pay the $20,000. If something were to happen to you early in the loan and there was $18,000 left on the loan, it would pay off the loan. But if you pay it off for the full 5 years or 6 years, you get down to $350 you owe, something happens to you, then $350 is used. Those credit insurance policies are usually less expensive, but again, the payoff could potentially be less. Another option that you would have is go out and look from an insurance company if you can get a $20,000 life insurance policy. So then you continue to make the payments. It gets down to the last month and you owe $350 and you get involved in an accident and you pass away. You don't have just $350 in coverage. You have $20,000 in coverage, and your estate can get the $20,000, take $350 of it, pay off the loan, and then the remainder amount goes into your estate. Again, there are different options. You have to choose what works best for you and pick that. There are other insurances. There's long-term care insurance now. Long-term care insurance protects your assets in case of having to go into a long-term care facility. So if you have money or assets that you want to protect and you go into a nursing home coverage is very, very expensive. It's probably over $10,000 a month if you were to go in and get this nursing home care. Consequently, if you get nursing home, long-term care insurance, it will help defray some of the cost or all of the cost of having to go into a nursing home. And as you can expect, the way premiums work on an insurance policy, the higher the premium, the more likely it is that you're going to have to use that policy, the higher the premium is as you get closer to it. So somebody who's very young goes out and gets a long-term care insurance policy, the premium is going to be pretty low if you're very young, because the chances of going into a long-term, having to use the long-term care insurance is not great the younger you are. But if you're older and you're getting close to where you might need additional nursing home services, then if you went out to get a long-term care insurance policy, it'd be quite expensive, because it's over $10,000 a month. You can imagine that it would be quite expensive. So there are different options available, but the older you become, the more expensive those options are. But it's a viable option for those who are contemplating it now or in the future, and also how much your assets are that you need to protect from being subject to a Medicaid lien, because there are more and more restrictive options as to what you can do with your assets to shield your assets from having to be used to pay for your time in a long-term care facility if you have assets, because you have to use your own assets to pay for it. Ultimately, there are certain estate planning strategies that you can undertake, and you should talk to an estate planning attorney about those options that you might have in order to protect your assets. One part of that plan may be a portion of long-term care insurance, or it used to be in the olden days you could transfer all your assets to your family, then go into a nursing home and have Medicaid pay for it. It doesn't work that way anymore, because there are certain look-back periods. They'll look back a number of years and what assets you had and may have given away or disposed of, and they may say, no, you gotta get those assets back in order to pay for that long-term care, because long-term care is expensive. It really is expensive. And then life insurance, of course. Life insurance is a big thing that we need to protect our assets, or to protect our families, protect those who we're supporting, to make sure that if something should happen to us, that we'll have insurance coverage for that. It protects in the case of loss of life. There's generally two types of life insurance. There's hybrids and things, but there's generally two types. One's term life insurance, and one is whole life insurance. Term insurance covers you for a set term. So if you die during that term, then the insurance policy pays the amount of the policy to whoever the beneficiary is on that policy. If you pass away after the term expires and you don't continue to have life insurance, then nothing paid because the term expired. So that's set for a specific term. The younger someone is, the less expensive it is, for the same reasons we talked about earlier, that if the younger you are, the less chance that the insurance is going to have to pay. Therefore, the amount that they collect would be less, because the risk of loss is less. The older we are, because the policy covers you for a specific term, the older you are, the premium goes up in incremental amounts to correspond with the chance that there's an event that would require the policy to be paid out. So if you're 65 and you have a $100,000 life insurance policy, it's significantly more expensive than if you're 25. So it covers you for that term. And then a lot of term policies just automatically renew, but the premium will increase as it automatically renews. Then the other side is the whole life policies to cover you for an entire life or over a period of time. The premium generally stays flat, stays the same, because they're already contemplating, okay, you're getting a whole life policy at 25 years old. We're not going to have to pay this thing out for a long time. So the premium reduces, but you pay it over your life. And so when you reach that point in time when you would pass away, that you have that covered. So say it's $100,000 policy, the premium might be very small at 25, and it stays through 30s, 40s, 50s, and 60s. And then all of a sudden something happens, then you will have paid all these premiums, and then the $100,000 gets paid to the insured, to the beneficiary of the policy. Now that was the phenomenon that these whole life policies were often sold, and there was litigation surrounding it. They were sold as the vanishing premium life insurance policy. Because here's the theory. The theory is, I'm just going to grab a number. You get a whole life policy at 25 years old, and it's $300 a year. And what the insurance company does with your premium, $300 a year, is invest the money, and that over a period of time, that $300, and then you pay $300 and $300 the next year, and the next year, and the next year, that you've accumulated this pool of money that has been invested. And not only is your $300 added to it every year, but so are the investment gains that were derived when the insurance company invested the money, and it generated profits, and all of a sudden you have a pool of money enough that it's generating enough income that it spins off more than $300 a year for that premium. And so what happens is that they were selling it to say, well, if we invest your $300 a year, every year, that after 10 years, you're going to have accumulated enough money with the amount you've paid plus with the investment gains, that it will be generating income of $350 a year. So you don't have to pay the $300 anymore. It just keeps, it'll take care of it. And people were jumping at that. And it turns out, for several reasons, that proved to be not true in many instances. One was that when that was presented, the person presenting it, the salesperson presenting it, or the insurance company, was representing that their calculations were based on a certain percentage that all those premiums would generate, a certain income percentage that it would generate through dividends and capital gains and all that stuff. And they would say, well, this is going to generate income of 8% a year. And so when you pay the $300 a year and then the 8% added on all those amounts over a period of time, you're going to start generating $350 a year in income off of this. Well, proved out that the investments were not generating the 8%, not even close to that 8%. And so people were being surprised at the end of their 10 years or 8 years or whatever it was, when they were told, you have to pay more. You have to continue paying. And people are saying, but you said the premium vanished. Yeah, well, it just didn't generate enough income, and it's not doing that. So if you want to keep your policy, you got to keep paying it. So there's litigation as a result of it. I personally have whole life policies, and I saw that right from day one. I knew that there was a chance that these sort of things happen. And so I just continued to make the payments. Out of sight, out of mind, just pay the however much it was a year. And what ended up happening, though, with my whole life policies and a lot of others that kept paying, is that the amount of the policy actually increased. over the years based upon the extra income and dividends and profits and things to generate over a period of time. So it may have been a $35,000 life insurance policy that over the gazillion years that I've had the insurance policy and paid it every month, the policy benefit now is $75,000 or more. And so if something should happen, I should pass away, this whole life policy, although I've only been paying whatever, let's say $350 a year, or $600 a year, or however much it is, that if something should happen, the beneficiaries of my policy would get more than what I originally had at 30,000, 35,000, or whatever it was. I don't even remember the amount, but it's twice as much or more that would be generated as a result. And so that helped me in that I now have those who have these types of policies have a larger insurance policy, but had a premium that was paid when I first got it in my 20s, the same amount every year. If those were term policies, my premium would have gone up over that period of time, and consequently, I have to keep paying more each year to get the same amount of benefit. But I just throw that out there so that people can see that there's very different options out there. Don't be swayed by this quote vanishing premium. The best thing you can do is decide, what do you need? When do I need it? How much can I afford to pay? And then make that decision. As you can see, there's many different products. They cover many different risks, and being a good consumer comes into play in deciding each and every one of those things. Determine what your needs are, what coverage you need, and then make your decisions after speaking with a professional. Don't let somebody talk you into what you want or what you need. Make that decision ahead of time as to what you need. Shop around for the best company, including the best prices that you might receive, and understand that just because it's a lower price than something else, it may not be better coverage. You need to understand what that coverage is. Each decision is unique for each one of us, and what is good for one person is not necessarily good for somebody else. Make sure you choose based on what is right for you. Investigate those options. Don't be rushed into purchasing something. Don't be rushed in or feel pressure to purchase anything from someone. If you're uncomfortable, go somewhere else. You can report any problems. All insurance products, all insurance companies are licensed through the New York State Department of Financial Services. They have two branches, banking and insurance. We used to have a New York State Insurance Department. Now it's the New York State Department of Financial Services, and there's an insurance division. Or you can contact our office. Just for example, our office has a healthcare bureau. If you have an issue regarding challenging your health insurer on what will be covered and what won't be covered, what you think should be covered, you're having some difficulty navigating the complex health care system, you can contact our healthcare bureau. Healthcare bureau has people on staff that can assist you and mediate complaints. There's also information through our healthcare bureau on what healthcare rights are out there, and I would encourage you to direct you to that service. Report any problems to the insurance department or to our office, or we can give you some guidance as to where you might go. Again, our healthcare bureau can assist in helping to correct overbilling. Some people may be denied necessary healthcare or medications, and you can be given some guidance related to that as well. Again, many products out there. Search what your needs are. Be a good consumer. Be a good consumer. Investigate. Don't don't sign up for something until you absolutely understand it. That way, you can be comfortable knowing that you've made the right decision for you. Sandy, I'll throw it back to you. If there's any questions that have come in, I'd be glad to answer them. And I'd encourage anyone to come join us either in our video sessions or maybe we'll eventually get back to Cornell Cooperative Extension in Ithaca for our live sessions, which I'm looking forward to at some point in time. And Sandy, I'll throw it back to you.
Great. Thanks, Mike. Lots of good, useful information. And I don't see any questions in the chat. So thank you. Thank those who joined us today for this presentation. Mr. Danaher will be back with us on Thursday, April 14th at 11 a.m. to talk about home improvement scams. You can find the Zoom link on the event listing on our website at ccetompkins.org/events. Thanks for joining us.